Hi, this is just a quick video just in support of a blog article that I wrote at the end of January talking about the need for monitoring significant intraday highs, but always noting where the current closing high is at within that same criteria. This is the S&P 500, which is our great benchmark for everything, but this closing high rule applies to anything you trade. But let's use the S&P 500 as our benchmark here. Here we're looking at where the all-time high printed on the S&P 500. And as you can see, as we established into that all-time high, we would make an all-time high and an all-time closing high. And then the next day, if we didn't make a higher high, let alone an all-time closing high, we would see a correction. And each day when we would continue on up again, here it took us until from this all-time high in the end of August until this all-time high near the end of September, we gapped up open above what was that closing high. That's what it took in order to get above it. We gapped up open, we made a new all-time high, and we set what is still to this day our current all-time closing high for the S&P 500. But the following session, when we made what is our standing all-time high at 2940, we did not make a higher closing high. See, here's the close on the day of the all-time high, but here was the close the day before, where we established our current and still standing all-time closing high for the S&P. And you can see when I hold the price level here, you can see looking to the right of where I'm holding the cursor, you can see the effort and the failures to get above what is that closing high. And you can see there was one attempt here with an open above that all-time closing high and a move up to try and make a higher intraday high, but it wasn't able to do it, and we fell back down and made yet another lower closing level. Once again, we closed at 29.2551 here versus 29.30 and change over here, and the rest was history. We sold off. So now, as we get into a new and significant time period, in this case, it is the the closes and the intraday highs for 2019. That's our new significant sort of celebration that we're using here. So each time we make a new high, intraday high for 2019, we like to look back and make sure we're making a higher closing high as well. So here we had a brand new 2019 high and a new intraday high. It was pretty easy. It all happened on the close that day. The next day, we made a new intraday high and we came back down, but we closed above the previous day's close. That was your clue to stay bullish. The next day, another new 2019 high and a higher closing high. That once again was your clue to stay bullish, only this time it wasn't such a good idea because we wound up getting a sell-off the next day. So it's not a perfect thing, but it's definitely something that you want to look for during the day, and you want to lean more bullish than negative for the next day. So as we went into Friday of this past week, we made our current standing 2019 high at 27.9420, and we came back down to close above that previous closing high. So even though it had been a couple of days, we have to remember that we made our intraday high and we also made a higher close above what is the established closing high. So that's why I keep track of those and why I tweet about those a lot intraday. They help us a lot in establishing where the market is decided, what it's willing to hold overnight. As far as when we make an intraday high, we need to stay above that previous closing high. It shows us that people are willing to keep on holding overnight going forward. Okay, I hope that helped you understand that article a little bit more and the importance of watching these closing highs.